And this is how we say goodbye to the month of June 2018. Welcome everyone to Business Morning this Thursday here on Channels Television. I am boasting number 5. It's good to have everyone on the block this morning. Nigerian equities finished this month nearly 7% in the negative territory as the equities market, or what you call the market cap, sinks below the psychological 14 trillion naira level. We've seen 5 months of load shedding of portfolio investors as we approach the most important event on our calendar, the 2019 elections, and the politicking ahead of that. So we're looking at the final days of May, or the final hours of this month, then what comes up next month. AMCON, Nigeria's Asset Management Corporation, is holding an analyst and media roundtable today, and tomorrow the agency will release its 2017 financials, and that is something we're following very closely for you on our calendar. Meantime, we're ending the month of May today without any closure on budget 2018 from the executive side, and no date has been set also for the closure of budget 2017, but the finance minister said that the budget 2017 will continue and the overlapping of those critical infrastructure projects will be rolled over into the new appropriation calendar period, most likely from anytime from tomorrow, the 1st of June. Okay, so tomorrow, in the next 24 hours, we welcome in June. Very important, if you haven't complied with the tax amnesty or what is called the voluntary asset declaration scheme, you better do that. This is the new month and the final deadline for your compliance. Meantime, investors and market operators are gearing up for MTN Nigeria's $500 million initial public offering. We're expecting that to come up within the 3rd week of the new month and will be closed towards the end of July. Listing on the stock exchange will be any time after that, technically before the end of the year. So investors and everyone are looking for some measure of lifting for Nigeria's equities. So we're asking whether the first quarter earnings for 2018 will provide some fillip for the market when we start the month of June. Negative sentiments have seen the Nigerian stock market down significantly this month, 6.45%, and we're now less than 1% in index returns since the new year started. This will most likely be part of the conversations when the Nigerian Stock Exchange and the London Stock Exchange tomorrow holds the 5th edition of the Dual Listing Conference here in Lagos, as both exchanges look to attract global capital to drive Nigeria's economic reforms. That is taking place here, and we're going to be part of that tomorrow morning here on Business Morning. We want to hear from the Chief Executive Officers of the Nigerian Stock Exchange and the CEO of the London Stock Exchange as well here on Business Morning to start your new month. Meantime, just no, before we go, we're going to have the World Cup in the new month of June. I'm not a football fan nor a fanatic, but I'm just interested in the business of the World Cup. So let's play some balls together. On the 14th of June, that will be a Thursday, 2 days before Nigeria will have its first match in Russia at the World Cup. I'm interested in the business of football. Meantime, Nigeria's Finance Minister, Kareem, says there's no need for anyone to panic over the country's rising debt profile. Kareem is quoted as saying that I have said this before and I am saying it again, there is no cause for worry. Nigeria's debt to GDP ratio is 20%, and it is one of the lowest in sub-Saharan Africa. She went on to say that, well, we are pursuing a very measured strategy. We are running a budget deficit. The size of that deficit is coming down now, end of quote. She finished up by saying that Nigeria is not among the countries that the IMF is worried about. We do have a challenge on debt service to revenue. That is because the interest cost is quite high. So don't worry about Nigeria's rising debt. Meantime, the Central Bank of Nigeria is also saying there's no need to panic over what you call the trend in the FX reserves from about $50 billion US to around $47.65 billion because we've seen a bit of increase in in terms of FX sales. The central bank said there's no need to fret as we see about $100 million down in that portfolio, bringing us to the doorstep of about 47.65 billion US dollars. Nigeria's reserves has been slowing down a little bit because foreign portfolio investors are exiting their positions on equities. And you can see that yesterday the stock market lost north of 150 billion in a single day, the day after the Democracy Day. And fixed income assets, investors are also selling down on treasuries very massively. Yesterday, nearly 190 billion via the secondary window of the FMDQ. Then you've seen the frequency of FX sales to below the change because of the demand for pilgrimage by Nigerians. So that's also putting some pressure on the FX reserves. But what was the market like on Wednesday when we came back from the Democracy Day celebrations? Naira was down 0.12% on the dollar at 362.02 at the I&E window. That's the investors and exporters window. And then that's the highest level since August last year. But the local currency firmed up a massive 0.82% on the dollar at 363 at the street market, and that's where the central bank is paying attention. So the naira recovered on the street because of the increased FX sales and putting pressure on and releasing some of the pressure on exchange rate, giving the naira some fillip. The turnover in terms of total trade at the I&E window over the FMDQ OTC market was 45.11%, $176.98 million. Those transactions were done within 359 to and 363 naira dollar exchange rate. And then we have the market will continue, of course, today for the final day. We're trying now to recap some of the top stories for us as we look at the month of May, the fifth month in the year. The crude oil market was one of the big stories where we're looking at ExxonMobil, one of the world's top oil companies, has reported on Bloomberg today that is putting $200 billion aside over the next 7 years for oil and gas projects around the world. As the news also filtered out that Kenya is joining the group of oil-producing countries in Africa. Very small. This Saturday, 600 barrels per day will be trucked from Turkana region to Mombasa port, east of the East African country. So Kenya is joining the global oil market with that very small amount, but at least the petrodollars will start flowing into the Uhuru Kenyatta's administration. This is part of the conversation. A very good month when you look at crude oil topping $80 per barrel, but there are wranglings and controversies still there about output as well as the OPEC reduction a quota among member states. Let's get Jubril Kareem from EcoBank to weigh into this conversation as we look at the oil market this month. We're wrapping up this Thursday. Jubril Kareem, let's bring you in on this conversation via Skype. Good morning. It's good to have you on the show.
Good morning, Bosun. Thank you.
Good morning. It's good to have you. Let's get this conversation going. Let's start with the price this month. This is one of the best months for crude oil prices, but wranglings remain about the output, whether it's Russia and Iran and Saudi Arabia, and there's a meeting this Saturday as well.
Well, I think to understand the reason why these rankers are filtering into the markets now, you have to understand the position of several nations regarding the prices of crude oil. So it is obvious that the OPEC countries, which include Saudi Arabia and with Russia, want crude oil price at higher level. Yes, but there is a limit to where there is a limit to that high level that they are targeting, and we've reached that level now, and that's the reason why these rumors are filtering into the market, because any excessive rally in price that push crude oil price to levels that are very, very attractive to show producers in North America is actually a negative, and it will be a huge concern for OPEC members. And that's the reason why many believe that it may be appropriate time for both Saudi Arabia and Russia to actually return some barrels to the market, due to the fact that even as against the 1.8 million barrels that they are targeting to take off the market, we are now at about 2.3 million barrels, largely due to Venezuela. So they believe that if this continues, analysts believe if this continues, we most likely will see crude oil price rally to levels that will be unfavorable for the OPEC members and Russia. And that's the reason why we have this rumors. And I believe so that if price continues to rally in the next few months, if not at this meeting, at the next one, we will most likely see some loosening in terms loosening the grip on supply from the OPEC members.
Yeah, very interesting time. The market is looking good. But I'm sure you know that Kenya is also smelling oil money right now with 600 barrels they're trucking out this weekend as the first production output. Do you think this is something Nigeria should watch?
Well, I think there are two ways to look at that. For Nigeria, I don't think it's not a concern for the global crude oil market. It's not a concern for any serious crude oil producer right now. So what they are going to be trucking right now is using about four trucks to ferry crude oil from the Turkana region to the port in Mombasa. Ironically, they'll be storing this crude oil at the old Mombasa refinery. When they can then, they will continue to do this until they can accrue a significant barrels of crude that can be put on a cargo for export. But if you look at the impact of that relative to the global crude oil market, it's quite tiny. So even the current production, there is production on site, and it's about 2,000 barrels, and it is 10 days for each of these trucks to actually get from Turkana to Mombasa. So it will take a very long time for them to accrue as much as like 200,000 barrels or 300,000 barrels that can be put on the cargo to have any significant effect in the market. Most estimates are putting it at about 5 to 6 months before we actually see a cargo in the market from
Kenya. From Kenya.
So,
okay. Jubril, we have about 1 minute to wrap this up. And we don't want to sign you off without looking at this news from ExxonMobil saying the world needs more oil, $200 billion over the next 7 years for oil and gas projects around the world. That's a figure and a project, an amount you can't ignore.
Well, I think it's a good thing for sub-Saharan African countries where ExxonMobil operates. I think that's the angle I would like to look at it from. One thing we've noticed significantly from sub-Saharan African countries that produce oil is that rate of exploration has actually declined, and rate of developmental projects in terms of bringing already discovered fields online has declined significantly, and they have not recovered alongside crude oil prices. So if a company like ExxonMobil with operation in Nigeria, with operation in Angola and Gabon and Equatorial Guinea is looking forward to investing significantly in new projects, is actually good for sub-Saharan Africa. We've seen significant decline in production in Gabon, in Equatorial Guinea, and these countries require more fields to come online to actually maintain the current level of production. So that's the way I say it.
Jubril, Kareem, thank you very much for wrapping up the month of May from the crude oil market side of things. We hope to see you next month in June. In charge of energy research at EcoBank, Nigeria. Let's take a break. We'll come back and we'll go straight into the commodities market. Quite a bit to chew there as we look at consumer market prices in the month we're finishing today and what are the burning issues.